Hello members, I'm delighted to be here to introduce our free and opt-in member benefit programs to you. So in this presentation we're going to cover what our new member insurance programs are, why we are making these changes and how these changes will impact you. So new member insurance programs consist of three areas. First is new opt-in member death benefit indemnity. The second is our new loan protection insurances, and finally our new life benefit insurances. Full information on these are on our website corecu.ie/insurance. You can call to our office on 01 272 5600 or ask a member of staff in any of our branches. The benefits and costs of programs may be varied annually. Members will be informed of any such changes via our website or by other means deemed appropriate by the Board of Directors. Terms and conditions apply. So opt-in member death benefit indemnity. So for just €60 a year, you can have €3,000 insurance cover. This €3,000 will be paid to your beneficiaries in the event of your death. Signing up is very simple. Just get an application form from any of our branches or online. Once we receive the completed application, we will organise for the €60 to be deducted hassle-free from your core credit union account. All members who have joined the credit union before 71 are eligible to join this, and existing members have a limited time opportunity to join before the 31st of December 2020. So a member 80 years of age for €60 can sign up to a benefit of €3,000 as long as they do so before the 31st of December 2020. Our loan protection insurance is of critical importance to the credit union and to you, the members. All loans are covered up to the age of 70. So what does loan protection do? Loan protection ensures that in the event that you pass away, your loan liability with the credit union is cleared, so your family or your loved ones don't have to deal with your loan. The liability is gone and dies with you. So in our new program that we're introducing, we're removing the need for a health questionnaire. So pre-existing condition limitation will be in place for 6 months from the loan, but all eligible members' loans are covered once the 6-month waiting period has expired where there is a pre-existing condition. So what does this mean? This means that if you die within 6 months from a pre-existing condition, the loan isn't covered. However, once you survive for more than 6 months with a pre-existing condition, your loan is covered. So for a lot of our members up to now, they haven't been able to borrow because of a pre-existing condition, even though they might be in actually good health. So this will allow them to borrow. We're also introducing a fantastic gap loan protection. This will allow our members between 70 and 85 to borrow from the credit union. And what this insurance does, it ensures the gap between the loan amount and the share amount. So if a member has 7,000 of a loan and 5,000 in savings, this gap loan insurance covers that gap between the two. So again, terms and conditions apply. So our life benefits insurance is the biggest change that we're introducing. So we have introduced a new concept of an active plan versus a standard plan. So our active plan benefits are up to €16,000 in shares covered. So this could mean that a benefit of up to €32,000 could be payable depending on your age. It's tailored very much towards the life stages and financial needs of our members, and there's a minimum payment of €1,300 benefit payable. So how does it work? So if you're under 34 years of age and you pass away and you have €2,000 in savings, the insurance benefit payable on that is 200%, which is 200% of 2,000 is 4,000. So you'll get your 4,000 in benefit plus your 2,000 savings back. So this will go to your estate, your family, your loved ones in the event if you pass away. And the same then works as the ages get older. It's 150% benefit if you're 35 to 44 and 100% benefit 45 to 54 and so on. So this is a fantastic free benefit from your credit union by just having an account with us. You automatically qualify for this. We're going to look at some of the terms and conditions now on the next page. So as we've already said, the active plan covers member shares up to €16,000 with a minimum benefit payable of €1,300. So the standard plan has €4,000 benefits and a minimum benefit payable of €700 upon your death. So how do you qualify for the life benefit insurance? So very simply, you need to join the credit union before you're 70 years of age, and you must have a minimum shares of €500 upon death. So once you've satisfied those two criteria, you're automatically covered in either one or the other plan. You don't have to do anything yourself. To qualify for the enhanced benefits of the active plan, you need to have paid a minimum of €500 loan interest to the credit union over your membership. If you haven't done so, or you might be a new member, as long as you have a loan for more than €1,000, you're automatically a member of the active plan. And again, if you've never had a need to borrow, and you never will have a need to borrow, it's very simple to access the active plan benefits by just opening up a core credit union current account. So we hope that as many members as possible will avail of the active plan. Again, for members, you don't have to do anything yourselves. This is an automatic cover. As long as you fill those criteria, you'll automatically be opted in. There's nothing you need to do yourself. So for members who haven't borrowed from us or saving with us, you will still be covered by the standard plan. But again, it's very simple and very easy to ensure that you qualify for the active plan by just opening up a core credit union current account. So why are we making these changes? So the old programs are no longer aligned to our needs. We want to incentivize members to participate in core credit union products, and more so, and most importantly, we want to ensure the viability and protection of our member savings. So when we mention that our old program is no longer aligned to our needs, what do we mean? The chart that's in front of you there now shows the number of members we have in groups, in each age group by 5 years. As you can see, we have a fantastic spread of membership over all age groups. The orange line that you see increasing represents the average savings in each age group. So as you can see, as our members get into their 50s, 60s and older, their average savings increase considerably, with up towards €8,000 and €9,000. So when the initial life savings benefit program was developed 40 years ago, it was never intended, or Ireland was a much different country and people had very little savings, and the whole intention of life savings is where people didn't have any other assets. They would get something from the credit union to help them at a difficult time once they die, and help their families at a difficult time once they die. We want to incentivize our members to participate in the credit union. A credit union is a cooperative. We are a financial cooperative, but a cooperative is only as strong as the members who use the services. And as you can see from the chart in front of you, ever since the mid-90s, our loans to asset ratio has been dropping. So our loans to assets, so we have significant assets which are effectively made up from the savings of our members. And the purpose of a credit union is to provide those savings and put those credit savings out into credit and loans in our communities. However, for the last 25 years, our members proportionately are borrowing less and less. This is how we generate our income. And it's from this income from loans is how we provide the free benefits. So as our loan to assets ratio drop, that impacts our income and impacts our ability to give dividend or to give free benefits to the members. So we want to encourage members, and we want to incentivize members to use the credit union as your primary financial institution. And these enhanced benefits of our active plan do just that. So again, just to look at a simple pie chart, the orange section of that pie chart represents the members who have never borrowed or who have paid less than €500 in interest to the credit union. So this is over half of our members. So we want to incentivize our members to borrow. So less than half our members qualify for this active plan from day one. However, I've demonstrated how easy it is to qualify for it, and we would encourage as many members to take out those products so you get the enhanced benefits and the credit union becomes a stronger cooperative. So we mentioned financial viability and the protection of member savings. The free benefits that we provide to our members cost quite a significant amount of money. And in the last 10 years, we can see the life savings rate on the chart in front of you. So the rate has gone from 22 cents per €1,000 shares up to over 44 cents per €1,000 shares. So in the last 10 years, the rate has doubled. Members increase in number. We are now up to 37,000 members. We have more members in our aging age groups. And this creates more claims. So with increased savings and increased member shares, multiplied by increased premiums, and then multiplied by the increased number of members. Unfortunately, it's a very simple formula that we no longer can sustain the same level of benefits as we have in the past. However, we have put considerable amount of work into revising our benefit programs that we can maximise both the benefit to the members and the sustainability of the program to the credit union. We want to ensure that we're here for the next 50 years. So I've mentioned about the cost of the free insurance cover. So as you can see from the chart, or the charts, the red bar charts, In 2016, their free insurance costs were €720,000. That's now up to €970,000, almost €1 million. In 2016, we're generating a surplus of 1.2 million, but that now has reduced significantly. So it's more than just the cost of insurances that has ate into our surplus. There are other things eating into our surplus, such as our low loan to asset ratio. But the biggest part that's eating into our surplus is the negative and low interest rate environment we're currently in. So the fact that we have 70% of our members' assets, or 65 to 70% of our members' assets, in investments rather than in loans, and those investments are now giving us zero and negative rates, the impact of that each year to us is 1.4 million. So our income is down by 1.4 million because our members are not borrowing and because we have negative rates. So while we're doing our best to manage our costs, we also have to try and manage our income. It's important that we look at the impact of changes and we do an impact analysis when we're changing anything for our members. We want to ensure that we continue to provide the best benefits possible and we continue to look after our members. So when we were looking at the challenges facing us, what we looked at were the life stages and financial needs of our members. And as you can see by the chart in front of you, the blue line represents the disposable income of a member over their lifetime. And the pink line represents the financial commitments. And I think we can all resonate with the chart that we see in front of us. As we finish school and begin work, our income, we begin to generate income and our incomes begin to rise, leading to an increased disposable income early in our life. Then we begin to incur commitments such as getting married, such as buying a house or renting a house and having a family. So at these stages of our lives, our financial commitments increase considerably, reducing our disposable income. And then as we head towards retirement, our financial commitments begin to reduce and we have an increased disposable income, even though our incomes may be dropping at that particular point. So looking at the impact analysis and how we approach this. So we have done a lot of analysis in the background ourselves. However, we were contacted by about 175 members out of our 37,000 members who expressed concerns over the revised insurances. So we've used the information from those members who expressed the concern to demonstrate how our new schemes will provide fantastic benefits even for those who are concerned. So looking at all of these members, each blue dot represents one of those members and represents the savings of the members. And as you can see, as we've already discussed, as members get older, their savings increase with time and with age. However, and as a credit union, we need to be very careful about this. A significant portion of our members never even manage to obtain a small level of savings. And we also have to ask ourselves, who are we here to benefit? And what is the ethos of the credit union? And here in Core Credit Union, we're very much focused on ensuring that we're looking after the less fortunate in society. So looking at this, at the data we've just spoken about and the savings per member or the shares per member, and looking at what would those members, that 175 members, have under the existing scheme. So each of those red dots would represent what those members would have today if they were to pass away today. So let's just look purely just at the benefits that they would have under the existing scheme of 12,700 age of deposit plus the DBI. One of our considerations were to reduce the scheme down to €3,000. Now this has already been done by a significant number of credit unions. Other credit unions have reduced it down to €5,000. We felt we could do it. However, we felt that this was disproportionately negative for a large number of our members, and we didn't want to do something that impacted our members. So you can see there with the chart, you can see from the chart there, the red dots represent the benefits under the old scheme, and the purple dots represent the benefits under the 3,000 scheme if we were to change that. So you can see there, a lot of the dots didn't move. They just went from red to purple, because for a lot of the members, it wouldn't make any difference because they don't have much to begin with. And then for a significant group of members, their benefits would drop considerably. So what the impact of that in numbers terms would be 45% of our members wouldn't see any impact, so it wouldn't make any difference. And then 55% of our members would have lower benefits. But again, as a credit union, we want to make sure that we do the best thing we can for our members with the constraints that we have. The old scheme in the red dots versus the scheme that we are introducing, which is based on a €16,000 age of death cover rather than 12.7 age of deposit cover plus the MDBI. So when we overlay our new proposed scheme onto that group of members that contacted us, you can see that if those members were to pass away today, their benefits will be significantly enhanced. And in fact, up to 70 years of age, most members will benefit. After 70 years of age, some members benefit and some members lose their benefits. And in numbers terms, 77% of the members in that group will actually have higher benefits under our proposed new scheme versus 23% that will have lower benefits. So now let's take an opportunity to review the considerations and that the credit union and the board looked at. So let's talk about the life stage and financial needs again, and let's overlay that with the options. So one consideration was to cease providing life savings insurance completely. It's a unique product for Irish credit unions. Many other credit unions in other countries don't provide it. And in a low and negative interest rate environment, it's going to be very hard to sustain this into the long term. However, we do believe our scheme that we have developed is sustainable. The other option then, as we spoke about, was to reduce share cover to €3,000. So you can see the impact of that. It impacts a considerably large number of our members. And then finally, looking at our new active plan share cover. And you can see from our new active plan share cover how it's actually really fitting well into the life stages. And members, if they die in their 40s or their 50s, they will have significant benefits. And just let's look at a human story around this. If a member 41 years of age was diagnosed with cancer in the morning and only had a few months to live, and we'll say that member had a car loan from the credit union for €20,000 and shares of €10,000. Their shares would attract €15,000 life benefit as 150%. So that member's family would get 10,000 shares plus 15,000, which would be 25,000, plus their loan of 20,000 for the car will be wiped out. So the benefit that would have gone back to that family, young children, would have been €45,000. So I'm delighted to be able to say that we've been able, with our hard work over 2 years, we've been able to put together a scheme that's both sustainable and that really matches the life needs of our members. So I'd like to thank you now for bearing with me for the last 20 minutes, and I hope that you can see the hard work that we put into this to ensure that we have a sustainable free benefits for our members into the future. Thank you very much.